Hi there, I'm back. So this is a sort of a middle of the road module between 5 and 6. Well, some of you might be a little bit confused now with all the module numberings and all that, but the modules that are numbered are the main modules of Power of 2. Now, if your module is not numbered, if the module that you have watched is not numbered, then it's just an additional learning material. Alright, so this is the module that's entitled Why the Stock Market Again. So this slide talks about the Philippine Consumer Price Index. The Philippine Consumer Price Index is the movement of the prices paid by consumers for a certain basket of goods, or so to speak. Dito pala sa baba. So this is the historical data, the forecast, the charts of the CPI of the Philippines. So it started in here. It starts in 1957 at 1.27 comparatively. These index points, and then it was tracked until 2014. Well, ito kasing this picture is from 2014. So 2014, 2015, at least the beginning year, it is at 139. So if you will look at that cumulatively, it has gone up 8.59% per annum since 1957. So that's the growth rate of the CPI. On the other hand, if you're from 1987 like I am, so ito yun it has gone up 6.6% per annum in the last 24 years. Yan. So mga 1990 or something. And so from here, no? So that's why am I showing this? I'm showing this to you because if you will look at this, this is the amount of the percent of it can even be compared to the inflation rate, but this is the amount, the rate of return, the rate of interest that the prices of a basket of goods has increased over the years cumulatively. So 1957, 8.59. Last 24 years, 6.6. So let's just put it at 6%. Let's just say it. The prices have gone up 6% a year. Compare that to the rate of return, or the rate of increase of your salary, for example, of the salary of an ordinary worker, for that matter. I'm from, I used to be an HR personnel. I'm still a practitioner with investors and people. And what I noticed is, based on the presentation of leading HR practitioners lalo na in the Philippines, 5% malaki na yan, no? Manufacturing usually 5%. But if you're, for example, in my field, education, it has not gone up that high. In fact, there are even years wherein education is only 0.5, 1%, and I'm sure some of the industry are also increasing very, very slowly. And we have not gone to 6.6% a year, much more 8.59% a year. Lalo na if you're part of the rank and file. If you're an officer, a manager, then maybe you would have reached this many times over. Tapos if you compare this to the amount of interest, or the rate of interest that is being paid by the bank on your savings account, then my God, why are you putting your money in the bank? They're just paying 0.25%, sometimes now 0.1% savings. Or let's say if it's a time deposit, then maybe they will pay 1% maybe, if it's 1,000,000 pesos. So but still you are losing money. You're losing the purchasing value of your money if you're just putting it in the bank. Now, if you will look at the PSEI, of course, this is a different picture now, no? Kasi 4,000 na lang ulit tayo but I'll talk about that sometime from now. But since from 1986 to 2014, at the time of this presentation, the PSEI has gone 15.25% per annum in the last 28 years per year. Ang ibig sabihin nun, if you have left the money, your money in the PSEI, just the index, you did not move it around, just invest it in the index, maybe a tracking index, a mutual fund, it would have grown 15.25% per annum. Even if for example, diba, if you are a trader, then you would have come out in 19 whatever that this year is, 1998, after the ito yung time ng mga hearing ni ERAP, right? Tapos bagsak na naman, no? You would have come out of the market at this point. And then maybe you would have come back here, no? 1999, 2000. And then during the time of the World Trade Center bombing, you would have come out, and then you would have missed all of this, and then maybe entered here again up to the time of the financial crisis. You would have missed this, and then entered here again. It would have tripled your money if you entered here and then resurrected here or something, or sold here. Then you would have come out like 6 times, 7 times your money, right? Eto hindi, it doesn't take note of that. It just says that you left your money and then somehow went back and said, I've grown 15.25% per annum in the last 28 years. So even left on its own, it stands to earn more than when you leave it in the bank. So let's say, syempre 4,000 na lang ngayon si stock market, 2020 na 4,000 siya. So plus 6 years pa to. Of course, it's not the end of the story. We are in a crisis today. Natural, it's down. So it's like we're talking about this, tapos we're here. It doesn't stay there. It goes up again. So it's not good to talk about that when the market is down. But even then, if the market is down, you would compare it. It is still greater compared to when you have left it, in the bank at 1% per annum. I'm sure about that. Okay, kasi 1986, 129.52. If you put 1%, or sabihin mo ng 2% or 4% pa, it would not come out to 4,000, at least at the rate that we are here today. Right? So it's still best to leave it in the market. Okay, now this is a leading indicator. I would say that this is a bellwether. It's a tracking indicator for me. Yung 10-year bond rates. If the 10-year bond rates continues to drop like this one, usually the market is trending upwards. So yan, it has gone down from a high of, I was still in the bank during this time, ang taas-taas ng bond rates, and then it went down. Now nasa about 4 something percent, 4.19. So why is this the case? So usually if the economy is strong, then the economy doesn't need to pay more for the money that it needs, right? So usually if the economy is awash with cash, they don't even need to issue bonds. So that is the reason for this. If the economy is becoming stronger, then it continues to go down. Right? Of course, if there's a crisis and the economy is slowing down, then maybe they will raise the bond rates. But usually, like ngayon, in the US, they have made the bond rates flat to zero, so that the economy will go back to its natural stride, or even get faster. Kasi nga, what drives the American economy is entrepreneurship. It's not really bonds and all that, right? So if the economy needs a lot of money, especially at this point in time, diba? When it needed a lot of money, syempre, the economy is low, for that matter. And if you're an investor, where would you invest your money? In the stock market or in the bonds? Syempre sa bonds, because the bonds are regulated, first of all, regulated by the Philippine government, and commitment yan ng Philippine government, and technically speaking, risk-free yan. Not absolutely speaking, but some economies kasi are already defaulting in their payment, but the Philippines, I'm sure they will not do that, kasi if we do that, then the more we will succumb to economic meltdown. Hindi natin gagawin yun, lalo na we don't need cash naman so much, no? Kasi pababa yung bond rates natin. So this is another thing that you can watch. If the bond rates continue to show weakness or sign of slowing down, then usually the stock market is going up. Okay, so in this slide, I got this from a book. Ayan, I scanned this. So parang this is logarithmic ang scale dito, right? So if you put $1 in treasury bills, in inflation, long-term government bonds, large company stocks, small company stocks, in the 1925, even during the time of depression, if you will look at this, no, the time of depression, talagang the stock market went really low. Ang daming nagpapakamatay ng time na yan. And yet, long term, from 1925 to 2009, if you put $1, 12,009 ngayon. If you put it in small company stocks, 2,300 in large company stocks. So if you have a portfolio of a mix, then maybe it's in between 2012. So maybe around $6,000-7,000. And if you put it in the long-term government bonds, $75 lang yan. Okay, sa inflation, it's only $22. So meaning inflation is being defeated even by bonds. And lalo na if you put it in the stocks. Tapos inflation is only $12. Ngayon siguro the question is, ngayon ganun pa rin ba? If you will look at the return of stocks, if you will look at it from a long-term perspective, not the daily fluctuation. Of course, when you say stock market, ang naalala natin is the last time that we were, whipped in the ass, so to speak. Yung last recession, last time na nagkamali tayo sa stocks. Of course, we will have stories, sad stories about when we made a mistake in the stock market. But if you just left your money and did not withdraw it even during the time of depression or confusion or recession, then you would see that it usually, almost always, historically speaking, through all the wars, calamity, World War I, World War II, Vietnam War, Korean War, lahat, no? Desert Storm, first Desert Storm, second Desert Storm, World Trade bombing, and then the financial meltdown, the stock market continues to go up. Okay, so ito naman yung return index. Again, logarithmic scale din to. And this is from 1801 to 2009. Kaya nga, it pays really if you live a long life. That's why Enrile is one of the richest man in the world, because he's been alive forever. So total return index 1801. If you put it in stocks, it would have been $10.7 million na. Kaya si Goblin is rich, diba? Because he has lived this life a long time. Tapos bonds, it would only be at $24,000. Bills, treasury bills, so $5,357. Gold is only at $56. No, if you purchase in 1800s, and then the consumer price index in the US is only $18. So imagine, cumulatively to, because the stocks even pay dividends and nagkakaroon pa ng split and all that, no? So this has gone up so high compared to the others. Capital markets. So this is me during the time that I studied capital markets. So Manila, 1927, and Makati, 1963, the capital market of the Philippines. And then I think during the time of Ramos, they merged and created the Philippine Stock Exchange. Yung time kasing to, some of our Chinese friends would play the difference of prices in Manila and Makati Stock Exchange. They would buy in Manila, sell in Makati. They would buy in Makati, sell in Manila. Wala pang computer noon, no? So, but in 1994, yan, isa na lang. They have more or less 300 plus listed companies only, right? We have 130 plus trading participants. We have online trading participants or brokerage, online brokerage. Siyempre, Call Financial is one of them. And then, less than 1% invest in the market. 1.8 or 0.6%. So this is compared to 53% in the US, 25% in Singapore, and about 15 to 20% in the ASEAN region. Hong Kong about 33%. Thailand, almost everybody, even when I went there, even the bus driver invest in the stock market. And then he said, the king invests for us. So that's why they are knowledgeable in the stock market. For us, no, only 0.6% something invest in the market. So that's why it's thinly traded even up to now. Yeah, so this is the example, 2018 ka pa ito ginawa. No? This is the example of the pse.com.ph website. So on this day, PSEI is at 7.8 na yun, 4,000, 4,500. And dito mo makikita, no, you will see here, if it's green, then that means it went up. So PSEI barely went up, 0.03 lang. All shares 0.24 down. So this is a dull day in the market, barely moving up or down. Ito yung mga index na to. This is the index of the market index. The all shares is the broader all shares. All shares are here. Kaya nga all the shares are here. So being tracked. Financials naman are the financials, no? Bangko, credit card, industrial, madami ang dito ng mga manufacturing nandiyan. Holding firms are, of course, the holding firms. The firms, like for example, Ayala Corp, holding firm yan, no? Lopez Holdings, First Philippine Holdings, yan. Services, okay, so yung mga nagdi-deal with services, I think the schools are also here. We have about 3 or 4 schools listed, STI, CEU, FEU, IPO, PO is Mapua. Mining in oil, yun. Usually, tinitingnan ko dito mining oil. Mining oil, parang ito yung katapat. Not correctly, no? Ito yung katapat ng penny stocks. Hindi talaga tamang gawin, sabihin yun. But, kasi kaya ganun, because usually, if the market lacks in enthusiasm, some of the traders go to mining in oil. So if you see that the mining in oil is increasing while everybody is decreasing, so parang if all the shares are red, kasi mining in oil is green, then that means the market is speculating. That's why it's going to the mining in oil. Yung property, medyo solid to, so yun, hindi yun basta gumagalaw. Also industrial, solid yan, no? Mga manufacturing yan nandun. Okay, the information available here, annual reports. Siyempre, makikita mo yung annual reports. So, you cannot be fooled by companies kasi you see everything. They are disclosed, fully disclosed. They have quarterly reports, even the board composition. You don't like, for example only, if you don't like Lusotan, for example, and then I realize, it sits pala in Eton. I don't want to buy Eton, diba? The board composition. Major shareholders is there, the list of the shareholders. This is where I realized na BDO pala is owned by the Cs, but one of the majority shareholders then ay ang Ayala, and BPI naman, while it is owned by the Ayala, isa sa mga major shareholders din ay ang mga C. So, they own each other. So, mayroon mga disclosures, if they issued shares, additional shares, and all that. So, andyan lahat yan. So, yan, pse.com.ph, and then if you click the edge, pse.com.ph, andyan din yung mga annual reports, mga quarterly reports. Yun. So we talk about mutual funds we will talk about that in a different presentation. But what about mutual funds? So these are professional investing. You purchase stocks with the best people. Best people means kasi ang daming nagre-research yan, hundreds of them, no? There's a full floor researching about the stocks. You divide your risk kasi if you invest in mutual funds, usually you are investing in about 100 or so stocks, or hindi naman siguro mga 50 or so number of stocks. That is why you are dividing your risk. So parang ganito yan, no? Sa mutual fund, these are investors pull in their money. They don't talk together. They don't come around and talk together and say, okay, we will pull our money. No, they already started doing that before. So usually mutual funds may-ari mga bangko. And we have a fund manager usually assigned by the owner of the mutual funds. Siyempre, yung company yung owner niyan. They invest with securities, they generate return, then it pass back to investors. Yan, parang ganun. Okay, so usually your exposure is low. Kasi nga, even though the company, the mutual fund owns like 300 million pesos or whatever, 100 million pesos, you are only invested in like say 10,000 pesos or 15,000 pesos. That's your exposure only. And it's like you're invested in yung 15,000 mo, maybe 1% of that is invested in BPI, 2% is invested in BDO, something like depends on the mutual fund portfolio. So your exposure is really low. So even if individual companies run into some problems, and mutual funds, madali nilang magagawa ng paraan yan. They can just dump that stock and then they invest it in another issue or another portfolio. Another good thing about mutual funds is you can exit anytime you want. Unlike if you are invested in a business, then you cannot exit anytime you want, diba? You started your own Jollibee or McDonald's or whatever, or restaurant na maliit, hindi ka maka-exit anytime you want. Of course, you've already built your store. Meron ka ng warehouse. You cannot exit anytime you want. But for mutual funds, you want your money tomorrow. You withdraw today. Depending on the mutual funds rules, then you are able to withdraw your money usually immediately. Not so immediate naman, but at least there are rules. But lalo na if you are owning your own mutual fund. In my case, I own my own mutual fund, so I can exit anytime I want. So another thing that you can do is to start low and then accumulate later. So for example, you just put in a little money every month, like 2,000 pesos every month or 1,000 pesos every month. Then you can start and you usually buy chunks and chunks of mutual funds, your favorite mutual funds. So hindi mo na mamalayan, it already grows. Kasi nag-average costing ka doon. Average costing means parang instead of buying today and then when it goes down, you don't buy, nagpo-fluctuate kasi yung market eh. So you are averaging on the point of entry. So sometimes you bought at 100 pesos and then next time you bought at 110, then you bought at 105. So depending on your entry, you don't invest one time. So may average costing. Okay, so is saving enough? Of course we know that savings is not enough, because if you meet an accident like this piggy bank over here, then it will make your life miserable. So inflation increases naturally rise. Ngayon, yung 500 pesos mo, alas wala na yan. Diyos ko, credit card ang gagamitin mo. You cannot buy this much. In 2003, it was still, plenty. Ayan. So, saving and investing. The difference, saving, fixed interest yan. Savings, accumulating your money, while investing, higher income potential. Kasi the higher the risk, the higher the return. So, stay invested. Let time be your friend. Invest early. We have two examples here. By the way, this is a presentation by BPI Express Online. So, invest in BPI. Ayan. So, this is a message from my friends at BPI. So, goal to reach to 1 million. Mike invested 50,000, decided to regularly invest 50,000 per year in an investment fund in an annual average return of 9%. Si Rocky naman postponed investing for 3 years and accelerated 200k in the same investment fund, regularly invest 50,000 from then on. So mapansin mo, the same lang naman ang invest nila, but Rocky postponed his investment for 3 years. Parang no investment, biglang naglabas siya ng 200,000 one time. Sino na una sa 1 million? After 12 years, Mike is a millionaire, yung kapatid niya hindi. So, natalo siya by 60,000. The total contribution is the same, but the returns are different because he started early. So, you have to start early in life. If you are to cross the street, then there are risks. You know that. Risk and reward. The higher the risk, the higher the reward. So, ito yung investment personalities. We talk about this when we will talk about this again when we talk about the mutual funds. So, investment philosophies, the old lady is that she's okay with low returns. As we want to see any decrease in the value of her money. This guy loves to ride the bicycle. Slowly but surely, opts medium-term investment. This guy invests. He wants a balance between return and income. He's okay with long-term investments. So comparison, he is like in horseback riding. This guy, Alejandro, prefers to ride a race car. Not afraid of possible losses in the short term, he wants long-term investment. Alam sabihin ni Alejandro, may lose from short-term investment. Like, okay, short-term, bumaba si BDO by 10% today. If you are a person like Lola, then you will say, oh my God, I lost my money, 10%. Diba? Akin na nga yan. So, diba? But this guy, he's looking at long-term investment, so, he doesn't withdraw, continues to ride. I'm not saying from this slide that you have to go like Alejandro. Of course, I am, my investment philosophy is over here. I should not be. I should be here or even here, no? But, ganito talaga ako. Okay? If you are a balanced fund holder, then maybe you are somewhat here. So, dun sa call rating ng risk rating, maybe this is 1 and 2, this is 3, 4, this is 5, 6, and this is 7, 8. So, it depends really on the kind of investment personality that you have. So, ito yung conservative, ito yung moderately conservative, moderately aggressive, and then aggressive. By the way, ang BPI, when you want to invest in BPI Trade, meron silang investment sa kanilang BPI Express Online. And I love that investment. Kasi you can just move your money from your account to that. Tapos every day you get to see it. When you open your BPI app, then you see how much investment that you have right now. So, ang gagawin sa iyo nun, the BPI will ask you some couple of questions para malaman what is your personality. Ang suggestion ko is answer it as if you're Alejandro. Don't say that you are Corazon ba to? Miss Lola, because if you will answer like there was a time na my people from my former school, they answered the questions. And then one person said, oh, ako aggressive ako. But then in the end, sabi niya, bakit ganun sir? Ang kaya ko lang invest ay time deposit sa parang special savings or whatever that is. Like, paano mo ba sinagot? So, wala, tinanong ko, am I okay if my investment goes down 50% one day? Siyempre, ayoko. So, pag ganyan ang sagot nyo, then of course, ito gagawin sa inyo, no? Kasi low risk tolerance kayo eh. It doesn't mean that it goes 50% one day. It doesn't mean that it will stay that way. So, ang ibig sabihin yan, dapat ang sagot mo lagi ay, I'm okay losing from time to time, kasi long-term approach ko. I don't need the money right now. I don't need it for another 10 years, something like that. Because if you say, no, I need it for, less than 2 years. Wala, dito lang kayo talaga. You will be put here, right? There's no point arguing. You will be put here. So, you don't need BPI for that. You just invest over the counter sa time deposit. But if you want all the rest to be open, you have to think as if you are an aggressive person. Now, but of course, I cannot dictate that to you. If you are really not aggressive, o ang gusto mo talaga, ay, yung kasing malugi. Pag malugi ako, ba't ako nag-invest dyan? O, pag ganun, wag na kayo mag-stocks. Please put this off already or, turn to other things. This is not for you. Because stock market is really about risk, managing your risk. And, talk to your broker, talk to your banker about the type of investment that you have. I'm teaching you how to be like a horseback rider or a race car driver. not this. Okay? So again, no offense yun. No offense. No offense, man. Okay, so risk profile in investment fund, yan ang customer suitability assessment. BPI will ask you that. So, titingnan niya kung saan kayo dyan. So, what are your options? Pwedeng investment funds. So, how do you invest in investment funds? Either direct investment. Ako, this is what I'm doing, of course. Some people are doing this investment fund. So, okay lang yan. Both sides are okay. But of course, if you are doing the investment fund, then as I said, you multiply, you divide your risk, sorry. So, merong security. Sense of security. Okay? Meron kang net asset value per unit na nakikita, right? This is the, parang you own a piece of the pie. And if you want to pay for that pie, for that piece, I mean, then there's a price. Yun yung price per asset, price per unit. Okay? So ano yung mga investment funds niya? Ito yun, no? We will talk about this again when we reach yung about mutual funds. So there's money market, there's bond, there's equity, there's balance. So money market fund, usually low risk yan. Low risk, low return. For BPI, ang hawak nila dyan mga time deposits, special deposit account, saka treasury bills. So during the time of this presentation, ito, in-explain pa pala nila yan. So, sa time deposit, may PDIC insurance yan. For short-term fund, walang PDIC insurance pero higher income potential, no? Ayan. So, time deposit, 0.6%. During this time, 2014 to, bumaba pa yan ngayon. PPI short-term, 1.5%. Okay? For bond fund, ito yung hawak ni BPI, no? Government bonds, corporate bonds, treasury notes. Bond is simply debt. May utang ang company sa'yo, yung government sa'yo, or the bank. BPI premium bond fund, 3-year annualized return is about 5%. Kasi during this time, 3% to 4% yung bonds. That's why, that's their earnings. Well, technically speaking, risk-free yan. Okay, although meron kasing corporate, that's why it cannot be absolutely risky. So, ito naman yung equity fund. Yan, mas mataas yan. The bond fund is at the middle. Equity fund, medyo mataas yung kanyang risk. But, yung return niya is, during the time of this, 17% per annum siya. But of course, ngayon, medyo mababa ito. Okay, equity fund. Balance fund, mababa ng konti sa equity fund, mataas naman sa bond fund. Kasi, middle siya ng bond at saka ng equity. So, like for example, if they own 100% of the fund, 50% don't usually stocks, 50% bonds. Ayan. So, tingnan nyo, 14% yung kanyang return. Kanina ay 17. Alright, so that's it. So, that's the end of our presentation. I hope you learned something. So, the whole idea of this presentation is this. If you want a perfect shield against inflation, then if you have the right knowledge, the right attitude about stock investing, then stocks should be best for you. Of course, I'm saying this because I know how to go about stock investment. If you don't know about stock investment and you will just go blindly investing in all that, purchasing this stock and that stock, and then when it goes down, sabi mo, kala ko ba mataas tong return dito? So that's not the right way of doing it. You have to study. I lost a lot of money during the beginning of my investment career, so to speak, when I was still in the bank. I don't know how to do it. And then, but I studied, and then nakachamba lang tayo because I left the market, so to speak, during the time when my father died in 2004, and I wasn't fully back in 2008, just a few thousand pesos or something. And during the time nung financial crisis, I was all in. So that's why after the financial crisis subsided, mga 2012, 13, 14, I already, earned a lot because I purchased at the rock bottom. And it will usually happen to you. And this is the proper time. This is the right time to invest. Kasi the stocks are down. And you are able to see from the perspective that I had before during the time of the financial crisis. Because the horizon is so grim and everybody is losing money. So everybody, they don't even want to talk about the stock market anymore. But since you know better, you know the horizon. After this clears, then I know that I will be better. So dapat ngayon kaya mag-invest. Okay, so that's it. Thank you very much.